This is a lecture from OpenTuition.
So in that last video, we went through and spoke about the revaluation of intangibles, where effectively the rules say that we can, provided that there is an active market to give us a fair value to revalue to. But in reality, it's very rare that we can do that. But that said, there are examples in the real world that we spoke about whereby you can revalue. I think the thing to note most of the time within the exam particularly is not to be put off if you're given a fair value that then makes you think that you can revalue. Okay, there has to be an active market. So let's put that into practice with this example here. So let's read the requirement first as always. The bit at the bottom in bold, calculate the total amount. So calculate means we're involved in some numbers. We want the total that is going to be recognised as an expense in profit or loss for that year ended June 20x3. Okay. So what have we got to the background of the scenario? So we're told there suddenly bought a new brand. So we have an intangible with there in terms of that brand. It's a separate acquisition. That was bought 1st of July X0. So is that 3 years ago? And we bought it for $20 million. So that $20 million is effectively the cost. That will have been capitalized as an intangible asset. It will be on the face of the SFP under your non-current assets, won't it? The estimated useful life of the brand name was 10 years. So we're going to amortize that 20 million over 10 years. So if I'm looking at my brand, $20 million over your 10 years is going to be $2 million per annum. On the old amortisation, isn't it? Okay. This is where you then need to be just a little bit careful because it says a brand specialist. Oh, wow. Doesn't matter that the specialist. Valued the brand at a fair value of 22 million. Is it there on the 1st of July 20x2? So you sat there, you're thinking, oh, hello, specialist. They know what they're talking about. So therefore, we're going to use that value of 22 million. We could work out the carrying value of the intangible. We could then revalue it up to 22 million, put a gain through other comprehensive income. And then on top of that, we could then say, right, we need to then amortize that brand over its remaining useful life. So given it's the start of the year, that would be 8 years. 2 years would have gone by the start of this year. No. There is no active markets. Okay, so because there is no active market, we cannot revalue. So the only thing that goes through profit or loss this year is that $2 million amortization. Don't try and recalculate a new amortization based upon the revalued amount. Okay, so this year there's $2 million on the amortization. Again, if the examiner wants to be a bit tricky, they could make it for half a year or something like that. Just be aware. So note the dates in the question. And then what you've got following that on, you've got a training course. Let's put that in red, shall we? You've got a training course. So you're imparting knowledge upon those employees. That training course effectively imparting that knowledge. That knowledge is like an intangible that's embedded within those employees, isn't it? It said that took place on the 1st of July 20x2. So again, that's at the start of the year. For all staff to train on how to use a new accounting software. Ooh, rock and roll, hey. Key bit is that the training cost $500,000. And then we're told, suddenly expect the employee to remain within them for an average period of 4 years. again, they're just trying to, like this bit here, you can ignore that. Here, you can ignore that. Okay, why? Because what you've got here is with the training. All you're going to do is take, is it 500,000 to the statement of profit or loss. Why? Because if you want to justify it, there's no control. We're not going to capitalize that as an intangible. Yeah, that is just written off to profit or loss as we incur it. We don't even try and then defer the expenditure over those 4-year period or anything like that. You don't capitalize it, you don't amortize it. We have no control because the employees can take that knowledge for that new accounting software and how to use it. They can take it anywhere. We don't control the employee, we don't control their knowledge. So therefore, the 500,000 is taken to profit or loss. So the total amount, and you add the two together, 2,500,000 is your $2.5 million. There we go. So just be aware of the little tricks that the examiner may try to throw in on any questions. But if you can overcome those, you're going to do pretty well when it comes to your intangibles.